What's up, YouTube? It's Joe Catchpolia sitting on the couch making some money investing in fractional real estate online as usual. Today, we're going to have a little bit of a nerdier video. I know that seems hard to believe, right? How we're going to get any nerdier than what we're already doing. I know I've mentioned this book a few times before. I definitely think you should read it. The Most Important Thing by Howard Marks. I go back to this book all the time. To really get my head right about, how I'm thinking about investing, how I'm thinking about risk. Um, I get a lot of questions, talked a lot about the secondary, the trading markets in a lot of these fractional real estate investment sites, right? I spend a lot of time on Lofty because it has the most robust secondary market trading at the moment. Um, yeah, I'm pretty excited that Arrived is going to start having some secondary market trading. We'll see how that actually goes. But before I forget, please like and subscribe. Any of the sites that I mentioned that I'm invested on, I have links in the description below. I also have a link to just a generic Discord channel where we're talking about fractional real estate investing. If you invest anywhere online in fractional real estate and you want to talk about it with other people who do that too, please join that community. It's been fun. It's small but growing, and I think everybody in there really uh, is taking investing in fractional real estate seriously. And I think that there's a lot that we can all learn from each other. So this is back to what I was talking about. Where one of the things that I like to think a lot about is do our profits come from, right? Whenever we're investing in property, um, we're having to make some predictions about the future, which is something I hate doing, but we're having to, because you're always going to be wrong, right? Like there's just no way to be sure um, about our forecasts. But so part of what we have to do is look at, uh, the whenever we're looking at the value of something to us today, the way that a lot of classically trained finance people like myself, we talk about the net present value of the future cash flows, meaning we look at all the cash flow we're ever going to get from this investment. We discount it back to today using some discount rate, and I don't want to get into the technicalities of that. We're not getting that nerdy today, but that's what it's worth to us, right? And so, which basically means that we have to look at the yields that we're getting, right? What are we getting paid on a monthly basis? But we also have to look at, the value of our whatever, the liquidity event in the future. Are we selling this property? Are we, refinancing and taking money out? Well, whatever it is, for simplicity's sake, I'm always thinking about this in terms of a sale, but it might not be what we do. Sorry. We could end up refinancing. Some of the platforms that's really an option, some of them it's not. But so I want to touch on a couple things about, or just really one thing about yields that really bothers me about Lofty in particular, but I think some of the other sites are doing it. But then I'm going to get into why I'm so excited about the trading as well, because in where I think that a lot of people hear trading and they think, oh, this is, it's risky. You can't make money trading in the stock market. But a lot of that comes from efficient market, the efficient market theory, which what we're dealing with right now is not an efficient market, but also trading stocks doesn't have the built-in arbitrage. And I think, I've said a lot of this stuff before, but I'm going to try to use some pictures today to maybe make it a little bit more clear. Also, I want to apologize. I know it's silly. I've been using this matrixy um, theme lately. I don't know why. I've just been enjoying it, and so I'm probably going to keep doing it for a little while because it is, really thinking about taking real estate, owning it digitally, right, is what always makes that click in my head. But I think it's kind of appropriate, but I've noticed a lot of people doing it, and it's maybe a little bit overdone. Anyway, back to the way yields work. Like if you look on Lofty, and let's say these are your annualized yields based on what you're getting paid each month, right? Um, Depending on what month you buy that asset, it's going to, at the moment, the way they're showing their yields, it's going to, if you're buying in February, you're just going to see 20%, even though it really gave you 1/12 of 20% in January, but they're annualizing it. And so depending on what month you're buying this, they're going to be telling you a different yield. But if you really think about, what we were just talking about, where we should be valuing all our future cash flows, I don't care what it made last month. I want to know on average over all the future months that I own it, what is it going to yield? That's one of the reasons that I like how Mogul presents their numbers, because I think that's what they're trying to do. Now, whether or not they're accurate, we're gonna find out, and that's what a lot of the other platforms are trying to do. But it's different. But Lofty doesn't do that, and so in some months they're grossly overstating the yield, right? Because they're like, oh well, we just annualized last month. Well, okay, but last month was a perfect month, and you're not going to have perfect months forever. But it doesn't have anything to do with what your yield is actually going to be. So, for example, if we held it for this year, or if every year was like this because it's a short-term rental and you have some good months and you have bad months, you're really getting a 15% yield when you just look at all of these numbers together, right? When you look at your average. And so, in 15, that's, I'll be perfectly happy with that yield. But I think a lot of people get stuck looking at the numbers on there and they're like, ooh, I want a 20% yield. There's all these properties that say 20%, but virtually none of them, and maybe literally none of them, I don't know, I can't predict the future, are actually going to pay that 20% over any reasonable hold period, right? Like if I was just trying to buy it for 1 month, get 1/12 of that 20% return and then sell it, well then maybe that monthly return means something. But to make any sort of educated decision about the future, we should be thinking about what's our average yield going to be, not what is any one particular month. But so it's one of the reasons that I don't. It's one of the reasons that I stay away from some of the just long term holds on Lofty, is because it's most of them aren't giving me all the facts and figures that I want to have to be able to predict what this yield is long term. And I don't want to fall into the trap of buying because it was 20% last month, but their average is actually going to be 3% because you're going to have a lot more 0 months. And I think there are properties like that. So I'm trying to avoid those. Um, which gets me into what I really like doing on there is trading. And so it's the other half of where we're making money, right? It's our equity returns. And so, if I'm a long run, long term hold real estate investor, this is sort of the line I'm thinking of, right? I'm buying at a certain price. What did I do here? Oh yeah. So the way I'm making money, there's basically three different ways that you can make money on equity, right? This is the model I think most people think about. You buy at today's price, and this is the value. The value goes up over time. You sell in the future at some higher price. That I think is, that's the one of the three that most people think about when they think about making returns on equity. But there are really two other ways. The second is, okay, forget about whether or not the price moves up. What you're trying to do is buy at a fair value today, but hope that at some time in the future, people are going to overvalue this, right? And this is kind of what a lot of people do with, you know, meme coins or stocks that are really hyped. They're hoping for this, people getting really excited about it and paying more than whatever the intrinsic value is, right? So buying at today's price, hoping that that at some point the market overvalues it and you can sell then. Um, I think this is you can look at some psychology stuff and look at the market and maybe maybe make this guess right more often than not. Same thing with this, right? I mean, you can look at fundamentals and get a good idea. Like this is why I'm always looking at um, you know trends over time as far as population growth, job growth, reasons that I think home prices will go up, right? I mean, that's why I'm always looking at this. But I think my favorite way, and that what I think, most active investors and active real estate investors in particular are doing, especially if we're out there in the real world, but I think you can do that on any of these platforms where you're, um, trading fractions of it is I'm trying to buy below the intrinsic value today and then just planning to sell sometime in the future. Oops, I didn't hear them moving this around too much. Just trying to sell sometime in the future, when the market is pricing it at the intrinsic value, right? So I'm not counting on the property price going up. I'm not counting on anybody ever paying me more than it's worth. I'm counting on buying this property for less than it should be selling for. And I think that that's what's happening there. I'm doing something. Okay. I think that that's something that we can reasonably do if we can determine where this line is, right? And that's why I'm always trying to do due diligence on the property and understand what's the value of the property itself. And so let's think about this in terms of, okay, I'm looking at this over time. I've got my price axis and my time axis. And this is just the intrinsic value of the property, okay? And we're in a market, it's going to have little ups and downs over the long term. I'm expecting to pick good markets and have those go up. If you buy in at an earlier time and sell at a later time, you'll make some money. That's just sort of typical real estate investing. That's what you can do anywhere. But why I like Lofty and any of the sites that have a good trading platform built on top of it is you get this second line, right? And so my first green line, this is the intrinsic value. That's the value of the real estate, right? The second line, the purple line, is the value of the tokens, right? Or the price of the tokens over time. And so you'll see this because the token prices vary so much with what last month's yield is. You get sometimes these really wild swings in the price. Now, over the very long run, this purple line should stay very close to the green line, right? And so my goal with my discounted token strategy that I always talk about is I'm trying to figure out, okay, where is this green line, right? Like if this is us today, where's the green line and which properties, so I'm trying to find the properties where the purple line where the tokens are trading are significantly below the green line, right? And so anytime that I'm down here, that's what I'm buying. And so I'm not trying to time the market, right? I'm not looking at, oh, I think this is a good time to get in. I'm looking at the relative value, the token value versus the intrinsic value of the asset. And so this is something that I know I've said this a lot of times, because of a lot of the questions that I get. I thought putting this into pictures might make this a little bit more helpful. And so, for example, on the couple of Chicago duplexes that I own, uh, on Lofty, I bought somewhere way down here, right? And I mean, maybe you could argue I'm actually here. It could still go lower, but it is, buying those at a price that's well below the actual asset value. And so, the goal is to wait until it gets closer to that value and then sell it. And so that does sound like timing, right? And so, um, and I mean, time is required, but it's not, but what I'm not just trying to look at a cycle. Like, so for example, when people are looking at stock cycles or looking at crypto, they're trying to look at this line and based on the shape of the line, trying to predict which way it's going to move next. And that's like technical analysis, and it's not what I'm talking about here, right? What I'm talking about is just that I'm buying the delta between what it's really worth and what I have to pay for it today. Um, but so one of the risks of this is that you could buy down here, but you always hear the market can stay irrational longer than I can stay solvent. This dip might stay down here for a very long period of time, right? And so then the fact that I got it below the intrinsic value might not really be worth it to me, except that on this platform, we have the ability to push for a sale in real life, right? And so what does that look like? Well, when you sell the property in real life, you have you have some closing costs, right? And so I always like to think about this other line that's below our intrinsic value, and it's basically if this is X, this line is always going to be 90% of X, right? Or 91 or 92, some uh, it is the liquidation value of the property in the real world. And so the reason I care a lot about this line is because, I don't want to just, if I'm buying these to trade versus I'm buying to hold for a long period of time, um, I want to be able to liquidate my position so that, you know, it's one thing. So sometimes they have these really big swings. And if I buy tokens at say a 30% discount to the intrinsic value, and that might sound crazy to somebody who's not familiar with the platform, but those deals exist all the time. You're always seeing these big dips, and you might only be able to pick up a couple tokens at a time. Especially when you have the really big dips, they get people pounce on them pretty quickly, but those happen all the time. If I'm buying at that big of a discount, okay, so I made 30% relative to the intrinsic value, but if I have to hold that property for 3 years before the token price gets back up there to sell out, um, 30% return in 3 years, even if you were just dividing it, but it's 10% a year, it's actually less than that because of the way compounding works, right? Well, that's no good. I mean, I'm not doing this to just try to make a 10% annual return. I know that sounds crazy to some people, but it's really not. Like if you get into real estate investing in real life, or you get into this, you start to realize like it's uh, I feel like that I've been doing this for 20 years, not online investing, but in investing in real estate in real life. And if my average annual return were ever 10% over a long period of time, I feel like I messed up, right? Because it is a very efficient market, which means there's a lot more opportunity to profit. Um, of course, none of that's guaranteed. You want to do your own due diligence on all of this stuff, right? With the properties, just because I've done very well with investing doesn't mean that you will, right? I don't want to overpromise that, right? I think you have to do all the right things to make that true. You have to understand the market you're in. You have to really, make sure that you're not buying something that looks like it's worth X, but it's really worth half of X, all those sorts of things. Um, But so, okay, what is this liquidation line? Well, if I'm trying to, once we sell, we have closing costs, right? So even if this is really the intrinsic value of the property, remember we're thinking about the net present value of the future cash flows, and that's net, right? And so that means take out all the sales costs. So then, if we think the property is worth this, okay, when I'm doing my math, I'm actually thinking about 90% of that most of the time. And so you'll see these little dips. And if it's a property that I'm buying to hold very long term and it has a good yield, I might be okay with just being a little bit below the intrinsic value, even though I couldn't liquidate that property for a profit, right? And so I have a few of these investments on here. I I don't trade in and out of them as often, so I can't really think of um, the names of them, but there's the one duplex I think in New Mexico, and there's a single family home in like somewhere in Kansas, that just have good solid rental yields, and I think that over the long run they're going to go up in value, and so I bought them at little discounts, but not something, not a discount like this big dip, but like a little bit below the intrinsic value, but probably not. If we turned around and sold the property today, I'd probably lose money on those. And so that's something I understand when I'm buying those ones. But then the ones that I'm buying where I'm looking for the deep discounts, and I don't necessarily think it's a good long term investment. One of the reasons for that is this green line might not actually be going up in that market. It might be going down, right? I mean, sometimes, excuse me, real estate prices don't always go up forever in every market. And so that's one thing that I think you really need to think about. Uh, you know, that's why I want to make this profit today, right? By buying below what I could liquidate it at. That's why that's such an exciting opportunity for me. And that's the same sort of thing that I do in real life when I'm trying to find investment properties. I don't want to pay market price, right? I'm going and I'm making a lot of offers. I'm trying to find deals. I'm trying to find something somebody else isn't seeing. Um, Instead of doing that when you're trading on Lofty, or hopefully this happens too on when Arrived brings out their secondary platform. And hopefully at some point ARC 7 gets theirs going and their secondary trading is at, they have it already, but their pricing, for whatever reason, it's remained too strong. But anyway, um, now what I'm trying to do, so with the really deep discounted ones, I want to be able to buy it at a price that if we push for a sale, I'm still making a profit, right? And that's the thing that makes this not market timing more than anything, is that I could be down here and this purple line could stay down forever and I can still make money on this because I can say, okay, other owners in this deal with me, why don't we go ahead and sell? We've been stuck down here. Let's just, let's sell out at this line here. That's, we put it for sale in the real world. We sell the property, and then we make the delta, right? We make the difference between what we paid for it in this dip and what it's worth in the real world. And so that's why um, so that I mean that so I think there's two reasons that make me feel really confident in trading on here. One is I think the green line, the intrinsic value of the property, it's so much easier to peg this value than it is to peg the value of a stock, right? Where you have to value a business. So that's the one thing that makes me feel really good about it. And so when you see the fluctuations around that line, it's really easy for me to identify these big dips and realize, hey, there's something going on here. There's value to be had. But then the other one is, if I do buy at one of these big dips, and for whatever reason this dip lasts a very long time, right? The market's staying irrational. I don't have to wait for it to come back up to the intrinsic value. We can get together as owners and say, okay, let's sell it in the real world, and then we can realize this um, liquidation price and make money that way. Now, sometimes we have some other owners who maybe they bought up here or they bought even higher. And so some of those owners are going to be stickier, right? They're going to want to hold on because they're like, well, I don't want to lose money. And a lot of times they don't realize, well, selling out for, selling out for whatever we can liquidate it for now and then making higher returns on some other property is probably a much better situation than just holding on to this forever so that you don't say that you had a loss, right? Because once we're down here, if you bought it up here, it's a loss. You just haven't realized it yet with a sale. So I think that's really all I wanted to talk about. I just wanted to make it clear, why what we're doing is, and I know I've done a little bit of a discussion about this, but I think that this picture, I hadn't really visualized it like this until I was reading again today and like really thinking about how the value works. And this is where the magic is, right? Like just because this line is so easy to determine, right? And I say it's so easy if we have knowledge and experience of the market and really dig into the property and look at all the sources that we have. I mean, it's just easy compared to understanding what Apple stock costs or understanding what Microsoft is worth, right? Like looking at like company, relative to stocks. This light green line is really easy to determine, and because of the way the Lofty trading platform works, and because of the way they report their yields, you just get these crazy swings. And so, the interaction of those two facts, and just create so much opportunity. And then on top of that, the ability to, okay, we can liquidate this and actually get the real world value or 90% of the real world value, whatever it is, in a relatively short period of time. It creates the confluence of those things just creates an opportunity that I've never seen in any other aspect of investing. I'm sure, I don't do, I've done a little bit of option trading and a little bit of stocks and, you know, uh, So I'm familiar with a lot of things, but I'm not. It's not like I'm an expert in all areas of investing. I've spent most of my career in, or virtually all of it, in real estate investing side. Um, but I think that it's, we have this just very unique opportunity here that, and it's a new industry, right? And so there are not a whole bunch of, um, Harvard and Wharton MBAs sitting in an office in New York City looking at these deals and squeezing out all of the inefficiency in the market, right? I mean, there's just like this, we're still somewhat in the Wild West in this industry where, most of the people that we're trading, that are our counterparties in these trades are honestly, I'm not sure what they're doing other than just saying, look at how this token price is moving, or look at what this yield was last month. I mean, I think that the because of that real inefficiency out there, I think that if we're spending some time really understanding where that light green line is, and then it lets us, um, I never want to say there's any certainty, right? Because I think the more sure you are about anything, uh the the more likely you are to just be blindsided, right? Like, I mean, I think a lot of times your losses come from the things that you're sure of that just actually weren't true. um you see that all the time with people making, big bets in certain directions, and so that's, I don't want to say, obviously we can never be sure about this green line, but the level of confidence that we can have in this price, I think, is higher than just about any other asset that I can think of that you are um, trading regularly. And the other thing too is this line moves real slow, right? Like, real estate prices are very slow moving prices relative to almost anything else, and it's because um, there's because of a lot of reasons. The sale process takes a long time. The pricing is always based on comps, and so you're always going to be close to the last sale, and there's always appraisers, and they're the ones sort of enforcing that. And so that makes that green line, much smoother than what we see the purple line at right now, right? And that's because um, none of those factors exist when as soon as turn it into a token and you can trade it. Within seconds, I can buy and sell. And sometimes I've bought and sold the same tokens in a single day, right? And it's just, there was a big dip, I bought it. A bunch of other people saw that dip. It actually got bought up too high, and you sell. Like, I mean, that exists sometimes. Um, where you'd never see that in real estate. Like, the instance where you'd see that in real estate, where you'd have a quick purchase and sale, is this situation, right? I bought it for way under market and I sold it at market. I mean, this is what wholesalers are trying to do most of the time. It's sort of what flippers are doing, although they're trying to increase the value. So it's not exactly. They're trying to basically, flippers are buying here and forcing the line up, and then maybe they're buying down here. They have some profit, and then they force it up. Um, but so I don't know. I thought that this visual might be a little bit helpful. It's the way I'm going to picture this now going forward, and I know I've always talked about trading around this price, but I've never really visualized it in this way. So I thought, well, it came into my head when I was going through, a little section on value investing. I thought I'd share that idea. Um, Hopefully this helps, clarify some of the excitement that I have about this product right now, right? And why I think, um, where I think there's this opportunity, and why I'm not just buying these for long-term holds or just only paying attention for the yield. When I'm buying on Mogul, I'm thinking about it in a much more traditional real estate sense, because you don't have that liquidity, you don't have that trading. Maybe they'll add that in the future. But so for their deals, I'm really just looking at the fundamentals of the real estate and their business model. And I'm still happy to buy on there because I think that they're doing uh, a better job picking properties than a lot of the other platforms. Again, though, do your own due diligence. Just because I buy on there doesn't mean that that's the right move. And especially on individual properties, you want to, dig into, because I think they have some dogs on there too. I don't think they're not batting thousand. I'm not a baseball guy. I shouldn't have tried to use a sports thing. But they're, they don't have a perfect record, right? They're going to have some good ones and some bad ones, but in general, I think that's why I'm still going to put money on there, because it's more of a fundamental real estate investment, where I think the opportunity on Lofty is significantly different, and hopefully we see this same type of opportunity pop up on Arrived once they have their trading, and I think that over time maybe Arc 7 will too. I really don't understand how come we haven't seen the big deviations in prices on there. I don't know. I don't know why it's not happening yet. I don't know if the way their bid ask system matches things up doesn't work the same way. I'm just really not sure. I keep going back there and looking at deals and just not seeing the big dislocations yet. Hopefully that happens over time. I say that it's too bad for the people that bought up here, right? When they're selling me stuff down here. But at the same time, obviously, if they're selling here, they need some liquidity, or they just made a mistake. There's also people that are buying here and selling here, right? I mean, that's the other thing is, like, if you're not really looking at where's this green line, what's the value of the property today, how does the token price relate to that property? Then I think that's a big part of where people are messing up. Anyway, I think that's it for today. That's plenty of rambling. I know I'm going to just work on wrapping it up. I know I keep telling you that, and then I do this. In any case, until next time, I am going to keep making mistakes so that you don't have to.